Jeff, I want to start out tonight. Jeff Lutz, Jeff, with lots and lots of experience in manufacturing and in moving products around and doing all this kind of stuff. We had a big decision today by the Fed. We knew that some or all of this was coming, or at least it's been speculated about. But Elon Musk should be the happiest guy on the planet because he's been asking for this for a very long time because he claims that this is a big reason he can't sell cars. So does this 50 basis cut and promised additional, not promised really, but the additional 50 basis cuts that we might get before the end of the year, is that enough? When does it impact? When will it get us back on track with car sales if Elon's right?
Yeah, I think very little impact until they probably get 150, 200 basis points of cuts. But it's, if you step back a couple thousand feet and you're looking at this from above, it's much better than being in a rate hike regime. You're in a normal. There's a big difference between easing and normalization, and it's something we should probably discuss. I view this as normalization. I wish the Fed would say that because it's abnormal to have the Fed funds rate, be 300 basis points above inflation.
Right.
So I view this as more of normalization, not cutting or easing, because they think of some big bad thing as on the horizon. So for Tesla has now moved. Tesla gross margins on the cost of sales side are going to be under pressure. The pressure used to come from MSRP. Now the pressure is coming from net ASPs because between net ASP and MSRP in unit economics are these rate reductions that Tesla is buying down.
Right.
Other companies have separate finance arms and different things. So it's going to be under pressure. But, if they can put up if they can put up record volumes this quarter and start really cranking up the utilization rate of their factories, their costs are going to come down. Their engineering teams and supply chain teams haven't stopped taking cost out. So that's going to continue. Cybertruck is in a better spot than it was 3 quarters ago from a cost perspective, but it's still, every one of those they make, they're losing money. So short term, it's psychological. And I believe the timing of this is what triggered Tesla to start these rate programs in Q2, which is like, okay, they're going to start cutting in Q3. They're going to start cutting in Q3. You wouldn't want to be, if you're Tesla, you wouldn't want to be buying down rates, not knowing how high they're going to go and how long they're going to go. So now that they're on the other side of this, I think this is a good approach. And, and I also think it sets the portfolio up nicely to freeze the 3 and Y more so where they're at and start bringing in the lower cost vehicles.
Okay. All right. So the theory on actual car loans is that the actual banks, if you want to go get a car loan right now, that the banks themselves would have already reduced some of the car loan rates, just like they do mortgages, ahead of the Fed cut, because the cost to borrow money in the corporate bond market and treasuries, et cetera, has dropped already by 200 basis points or whatever. So that's with regard to you as a consumer going out and buying. But with Tesla, when they go to the banks to get these rates, have they already gotten those cuts as well? So are they already dealing with a reduced amount that they're paying for the buy downs?
Yeah, they're definitely getting, they're shopping around billions of dollars of business. So yeah, I believe I would be surprised if they're not getting a good rate. But at the end of the day, credit has tightened up for consumers. 1 in 5 people are being rejected when they go for a car loan. It's the highest ever since they've kept the metric. 80% of people that buy a car use financing, and 1 in 5 of those are being rejected. So this has been hurting sales, this tightening, and that's why these the economy could be in a recession right now for all we know. Certainly pockets of a recession
Sure.
are occurring. At the same time, you've got record used car sales in August. You've got inventories coming down on new and used cars in August. Maybe it's a 5-week month, maybe, who knows, but there was definitely some positive signs. But in general, where everybody thought the US auto market was going to be at the beginning of the year, they thought this year would be a 16 million unit year. It looks like it's coming in closer to 15 or 15.2.
Right.
And, people are eating those, they're eating that differential right now. So we'll have to see what happens with that.
Well, your namesake, Jeffrey 𝐂𝐦𝐚𝐢𝐥, who's a big time bond guy over at Double Line Capital, CNBC relies on him as their number one, bond expert. He feels that the 50 basis point cut today is basically an insurance policy. So it gives the Fed an opportunity to kind of straddle the situation. If we're already in recession or going into recession, they've made the first cut. So that gives them insurance against being way too late. And at the same time, they're not stuck. If the numbers don't look right in the next at the next meeting, they could pause. They could pause for 2 meetings and not get under too much scrutiny for the decision. So he's feeling like this is an insurance policy, but he like you just said, and like I've been saying, he believes that the recession started in September. I think it started in June. Of course, we'll never really know, so it's easy for him to say and for me to say, but we won't really know with that kind of precision. But that he does believe that this is the right time. He thought that this was a good decision. Did you feel like this was the right move by the Fed for a change?
Well, he thought they should. I think he said he thought they should have went in July, but
yes, he did.
So yeah, I feel good about the 50, and but with these long and variable lags, we still don't know if credit is going to blow up, if a bank is going to there's still these huge risks out there. We had the whole carry trade issue about a month and a half ago. So we're not in a place where you're not going to see these risks out there. There's significant risk out there. At the same time, and quite frankly, we're above the Fed's original target coming into the year for employment. So we're above target, unfavorably above target on unemployment. And I think we're kind of where they thought they would be on inflation, maybe even a bit lower.
Mm-hmm.
So yeah, for me, it's if inflation is 2.75, 2.5, I mean, why are the interest rates up at 5.5, 5.25, 5.5? So until we get through this normalization cycle and get back to something closer. The question is where is this going to land? Like for the last 2 decades, we've been accustomed to 0% interest rates.
Right.
And it really drove, kind of economy. So question is, where is this going to land and what does it mean? And and Tesla really did its growth spurt, through 0% interest rate environment. So It's just something to think about in the background. It's part of the reason that I'm pleased that the company is transitioning to get more and more of their margins and more of their revenue through software, very high gross margin business versus depending on bending metal and shipping it all over the world.
Sure. So you mentioned in a post the other day, you talk about potential, issues that could, if we're already close to recession, could kind of throw us into one. Sometimes that is labor. We have Boeing going on strike at a couple of their plants, and they laid off, they said tens of thousands. I didn't read the article to see how many tens of thousands, but that usually trickles down. The 1991 Bush recession was basically caused by McDonnell Douglas and Boeing laying off so many people, so many engineers. You also mentioned in your post was about the potential for a at least East Coast and Gulf Coast dock strike. I hadn't seen anything
Yeah.
about that until I saw your post. What are you hearing there? Is this looking like a bad one? Is this looking like something that could be resolved? Of course, it's coming right at the Christmas season, which is a really bad time for dock strikes. What are your thoughts?
Well, I was definitely pinging subscribers a couple of months ago on this because I knew this negotiations had broken down, and I knew that there's a tremendous amount of business that flows through. These are gigantic, and this is the busiest point in the season. And they do this on purpose.
Of course.
They want these negotiations to culminate, at a point where it's the busiest points in the year we're trying to take on inventory for the holiday season. So it's not looking good right now. I mean, we're basically within 2 weeks of this. You don't hear anything about it in the news because of the daily thing that's happening in terms of campaigning, assassinations, and so forth. It's not. It should be rising to. I think it's going to be one of those things where it's like, oh my God, we have a major port strike on the horizon. The question is in the last one, the Biden administration, they came in and kind of put a hand over it and helped figure it out. Are they going to be able to do that here, or is this going to get turn into a bigger issue? So to me, this is one of the biggest risks of facing the economy right now, actually, is this. And that's why, and the CEO of I forwarded a note from the CEO of Flexport, who does a lot of logistics business all over the world, and we've both of us have been trading messages on this and what the impacts could be. So yeah, this is a pretty big issue.
Okay. All right. And then in general, do you normally I can't remember whether you put out a number for each quarter. Are you one of the ones that play the game on the unit volume? Okay.
No, I'm not, up there with the drone counting cars and looking at parking lots. And there are people that do that, and they do a very good job at it. And I actually, the person that I kind of look to the most for that and bend my ear for is Brian White, Futuraza. And I think, and there's others that do it, but there's a lot of people that are just, putting their guesses out versus people that are doing the work and trying to figure out what's going on in the factories. So
yeah. All right. So let's see, just a second. There was something else here. So do you think that I've been saying for a couple of weeks now that the Tesla sales numbers, not necessarily this quarter, but next quarter, will probably leap because of the FSD and the robotaxi, that all of that is going to cause people to buy more Teslas as the FSD becomes more perfected, becomes potentially hands-free, and not only hands-free, but maybe supervising free. And that as people start thinking about robotaxis as a business, that this will drive some sales, which could be could really add, a nice differential into the. Do you think that'll have more impact? Do you think lowered interest rates will have more impact? Do you see anything that will make the fourth quarter like a bonanza, or are we just going to slowly move into better days?
Well, it's not going to be FSD, and here's why. I'm a huge fan of FSD and what Tesla is doing. The problem is discoverability and awareness. And you don't start an awareness campaign on September 21st and think you're going to be through your awareness campaign. Think of it like a gun blast going off, and how far away is it, before you're able to hear it. And there's this progressive effect that's needed in any kind of awareness campaign. And I would guess that we're at the, fractions of a, 0.1% of people in the United States that are even aware of it. I mean, you can just do the math. And there's a reason for that. I mean, it hasn't up until, call it, 12.3, maybe getting to 12.4 is when it really started getting its legs in terms of its efficacy and being really good. And I think now, in terms of Tesla and their training, they're still doing all this training, I believe, out of California. And now as they bring on this additional capacity, I'm going to be interested to see how these models run on the new capacity. But it, I think it's going to make significant improvement. But I think the car could, Elon used the term of like, you have a cap of my cack and, put on a top hat and cane and start singing and dancing. That's great if people see it. But if people don't see it, it's something that happened in someone's home in some area in some zip code in the world. So this is not widely discussed in the Tesla community, but I would be interested to see, this would be one of my questions, is what's Tesla going to do to drive awareness of the fact that their millions of vehicles will at some point be able to drive themselves very, very well on city streets versus what people have been indoctrinated for 2 decades or more of lane keeping and lane assist on highways. How are we going to get the awareness out? So I don't think it drives sales until the awareness is there. And I don't think they're going to drive the awareness until they get this thing to be really good.
So that was
And
that was going to be my question of you. Do you think they should wait until it's not supervised before if they were going to spend $100 million on advertising, should they wait until it's 100% done? And
well, I think a couple more of if we're really going to see these 5x or 10x improvements that have been discussed, if we hit a couple of those, I think you're going to be on your way and you could do it supervised.
Yeah.
So, and I think the other catalyst may be, and this is my prediction. So first off, interest rates are going to get people to buy Teslas. The no money down, the China, like these spiffs people are going to come in and buy Teslas. They're great cars. The total cost of ownership, that's what's going to drive people in the near term. However, if on 10/10 Tesla announces a supervised robotaxi, the Tesla network, they announced the Tesla network,
right.
And they announced it's going to be live, maybe even in Q4, where you are a driver, you're supervising the vehicle. However, you can press, when your fare comes in or somebody wants a ride, it's going to be automatically downloaded to your car. Everything's going to be set up for you beautifully, payments, everything. And the car's literally going to drive itself. You're going to press one button, and it's going to drive you to your pickup. It's going to pick up that person, take them to their destination, and bring you to. If they announce that and that gets going, all the used Teslas get bought up pretty quickly, and you would see a run on new vehicles potentially. So that to me could be a watershed event if that happens. A lot of people don't agree with me. I'm not saying that they're going to start the supervised Tesla network on 10/10, but if they announce it and it's imminent, like in a couple of months or before the end of the year, I think that's a big deal.
Okay. Yeah. And you and I are 100% on the same page with regard to the used Teslas. If I was 10 years younger, I would be buying used Teslas now. Before the price goes up, I'd be making deals with a whole bunch of people in Colorado to buy them. If they didn't put the money in, I'd make a deal with them to put the money in and set up the system in Colorado. So I think, because I think there's other people like me out there that are just kind of waiting, biding their time but you can't wait too long because at some point the price of the used Teslas are going to go through the roof.
I think Tesla too is going to have some significant advantages. So first off, Uber, they are the masters of this. They have a lot of data that, they're doing food, they're doing all this kind of things. They're the masters of this. However, Tesla may have a structural advantage from a cost perspective with what they're doing. You should be able to drive longer, and they should be able to give more of the profits over to the driver. So it may be just a much better deal because a lot of Uber drivers drive Teslas. They're easy to drive.
Right.
You can turn on FSD, but a lot of them I think could flip over to the Tesla network if they get a better share of the deal. And Tesla could do that in the beginning, and they could get a lot of drivers, and they can get a lot of people over and doing this. And I think if analysts can walk out of that event and just have a very basic, because to me, I don't find them critically thinking as much as I'd like. Some of them are really good, some of them aren't. But they can just walk out of that event saying this is an Uber Lyft competitor and just much better than them, and just the way this is set up.
Right.
I think that's a big deal for the company.
Cool, cool. All right. So now, let's see. Okay. Whoops. I had so much stuff here. Okay. All of that was not important. It was all about the wolf. I don't know. Did you see the wolf research notes that came out today? I'm not sure there was anything in there. They were basically saying all the same things.
Okay.
Yeah. Okay. So, questions. We have this program going where everybody's bringing their questions, that if they could be in front of Elon right now, or if they were called on at the 1010 event, or at the event at the regular earnings call, the kinds of questions that you would just be dying to ask. And you said you had several good ones.
Yeah. Yeah. And we just went through one. One was around, Tesla, do you understand awareness of full self-driving? If you go out in the populations and you ask 200 people questions about it, will they understand it? Do they know it, and to what level? Because to me, that will dictate, the awareness will dictate the uptake. The performance is the lead in the whole thing. If they get the performance to a level, then they got to get awareness up. They got to test for awareness to do that. So my first question would be around that and where they're at on that. I have some big ones. What do they think the terminal size of a Tesla data center is going to be, in dollars, or in terms of GPU processing power, whether it's, Tesla, NVIDIA, or Tesla Dojo? But what's their terminal? What's the size of the system? Is it this, Larry Ellison $100 billion plus system? What is it, and what time frame are you going to, achieve that over? And kind of connected to that question is, are you raising capital as a result, and what does that look like?
When you ask the first question too, I think of another follow-up, which is how much of it will be Dojo and how much of it will be other people's.
Yeah, and I think Elon has commented on that a bit, but yeah, you should comment on that, because at the end of the day, yeah, if they're buying, so Tesla Silicon is not a different division, that is under Tesla, so they could literally buy, silicon from them. You're going to sell themselves silicon, essentially. Right. They're not the manufacturers. They're going to buy it at a margin from a TSMC or a Samsung.
Right.
But they're not paying Jensen Huang 75% gross margins.
Exactly.
So yeah, that was a big one. I had another big one, which was why are we having the Robotaxi event on 8/8 or 10/10? Like, why did you pick those dates? Like, why? Not so much the 8/8 or 10/10 and the dates match. Forget about that. Why are we doing this in the third quarter of 2024?
Oh,
why? Because they're going to unveil a vehicle, Robotaxi, that's not going to be in production for another year.
The actual cab.
The actual cab. So that connected me back to my original proposition, which means that they are going to launch a supervised Tesla network to get everything going, to get the bugs worked out, to get people interested, to get ridership up, to get customers going. And that would be the only reason you would try to accelerate and do this. And you'd be showing teasers of the app in your earnings deck, is that you're gonna start with a Tesla network supervised, and then you're going to drive that on a path to being unsupervised. You're going to launch FSD supervised in Europe and China. So anyway, why are you doing the Robotaxi event in Q3? What is it connected to? What are the prerequisites? What are you connecting it to from an integrated schedule perspective? I'd love to understand that.
And we just had this thing that Larry did the other day, Goldberg, with his friend from Norway, where they talked about the UN being involved in the automated driving arena, coming up with these kind of overview kinds of regulations that apparently Europe and Australia and Japan and others are all going to be paying attention to, and maybe even the United States is going to be paying attention to. That brings back that same question. We talk about supervised versus unsupervised, but I've been bringing this up for weeks and weeks and weeks. I've got different ones of my co-hosts having different opinions on this, and that is the business of remote drivers. And if China's talking remote, and if Tesla mentioned remote in their letter to the Australian regulators, I have to believe that at least for a time, there's going to be there's going to be some kind of remote capability. What do you think?
I mean, it's certainly a possibility. And for some places it may be kind of the training wheels that they want. Maybe, and there should be a metric on how often are you using the training wheels. But I see people putting out data from other companies that run taxi services, and they're putting out disengagement data. I'm like, well, do you understand how much remote work is doing? Like, why are there rooms full of people with steering wheels in front of them? It's not an arcade.
Right.
So is that being factored in or not? Do you even know the data you're looking at? And do you even understand, are you comparing apples to apples? Because
Right.
this could, so, and by the way, I do think that there need to be federal standards around that and probably international standards around this. So we look at this in a kind of a unanimous, similar manner,
Mhm.
and approach it that way. So there's no monkey business. So yeah, it could be a possibility. So yeah, I talked about FSD awareness. When do you flip that switch?
Right.
Talked about the terminal size of data center and raising capital. Why is a robotaxi event when it is? The other one I had was around the Cybertruck and how is it doing from a quality perspective.
Hmm.
I am a little bit concerned. I
Hmm.
do like the approach that Tesla took in terms of the foundation series, small volumes, couple thousand in the first quarter. That is 100%. As a former chief quality officer, I don't know better than Tesla. I'm not saying I do. I'm just saying I really appreciate the approach they took. Question is like, what's the failure rate of the product?
Hmm.
Because you 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 see a lot of just ad hoc posts of my truck died. My truck died. I'm getting towed. My truck, how many? I mean, there's only been like 25, 30,000 of these in the wild, and I know I've seen more than 20 of these posts. So um how's Cybertruck quality doing? Are we knocking these issues out? Is there anything fundamental to the design, or all these things getting knocked out in software, and then you know minor tweaks that people bring their cars in for whatever? So just how's it going?
Yeah. Yeah.
Because I know um a lot of the future is depending on the electrical architecture that's inside of this vehicle. So I'd ask about that. And the final one I had was, describe day one for Elon and Tesla in either presidential administration. And what does day one or week one look like in January for him and the company? And what are the prospects for him and the company in either administration as they see it? We can sit on the sideline and say it's going to be fine no matter what. I hear a lot of people saying that,
Yeah.
and that's fine. That may be the case. And it has been, quite frankly.
Yeah.
But I think the landscape has changed, and what's it going to be like? And by the way, is he if one side wins, is he doing this advisory role for government efficiency, or is it something broader? Like, talk to us. Like, can you
Oh,
level
so
with us
you're
about
you,
what's
you're
happening?
asking this on two levels. You're saying on one level, what does Elon Musk personally think day one looks like, even if he's not involved, just from a just
Yeah, either administration. What is
either
day? What is
administration?
week one for him and for Tesla, and either in
Got it.
with either administration put in charge? What does it mean for him, and what does it
Him
mean
and for
for
Tesla.
Tesla?
Yeah. So for instance, in fact, I posted on this today. Maybe I don't know if you saw my post, but I posted on today. I said, well, somebody said something about, well, it won't matter. Well, it could matter to Tesla, because if we have a continued administration of the type that we've had for the last 4 years, it could mean continued failure to acknowledge anything that Tesla does, or even SpaceX or Neuralink. Holy mackerel! Neuralink makes puts everybody on notice the other day that the ADA, I mean, the FDA has approved the next level of, I guess, testing or whatever that's going to take place
Blindsight, yeah.
with the flights. And I'm like, this isn't a headline in the New York Times. This isn't something that the administration is congratulating themselves even
Yeah.
for. Yeah.
Civilian spacewalk. I mean, there's all these things. So that's one side of it, but
Yeah.
I could quite frankly care if he's got a great, like, lovey-dovey, or to me it's more about what
Fairness,
does it mean for, yeah, or there's bigger things that could be going
right?
on, and what does it mean for Tesla? What does it mean for him?
Regulatory fairness, decisions about making purchases of rural of uh,
Yeah. Well, let's
Why
be
not?
clear. I mean, Tesla did its major growth spurt during the Trump administration,
Right.
and then during this most recent administration, the IRA has, you know, out in an outsized manner, helped and been helpful to Tesla in the United States. And yeah, so I think there's some pros and cons either way. I don't think Tesla needs the IRA going forward. I think it's one of those things where yeah, it's helping,
Mhm.
but um, when it's gone, if it were gone, it would have an outsized, I think, a bigger impact, like a catastrophic impact on other people besides Tesla.
Yeah.
So yeah, so there's puts and takes on either side of it. I just love to hear it from their perspective. You could probably do a whole show on this, Randy, just kind of like going
Probably.
through the pros and cons.
Yeah, one thing that's that of course I talked about the other day with everybody except you, because I think it happened the day after you were on, was this major breakthrough in terms of the 100 million 4680s. And it's one thing to talk about how important that is to the company. I consider it to be number four, and and Larry and I don't agree. So, but I have the Optimus as being number one, the Robotaxi being number two, and FSD separately as being number three, and then number four being batteries. I think until there was an Optimus and a Robotaxi, batteries would have been number one by a long shot. So the battery breakthrough is important in and of itself, but it also would appear that maybe if we're going to be ramping up to the 100 gigawatt hour level early next year, we could be looking at $1 billion plus per quarter just in Robotaxi IRA money. I'm sorry, Robotaxi in 4680 IRA money. And that's, I don't think, on anybody's watch list.
Yeah, um, it is, and it was something I was screaming about before the IRA started when they were just planning. But during that time, Tesla was having execution issues. Now, I mean, they probably are. They're probably close to. I mean, they're probably, I think what do they leave that? They're at 100 million cells. I think they may have started the quarter at 450 or 500K a day. And, they're probably, close to 1 million now.
Yeah.
And, this is a big deal. Like they really went up. The slope of the ramp curve meaningfully changed. Now, this is not the dry battery. This is not the process I think Tesla wants to scale globally. I think they want the smaller process. They want, get all this, go to the dry electrode side of it, cleans up the whole process, shrinks it in
Yeah.
size,
Yeah.
in time, and process time. That's the one they want to get to. And then they'll cut and paste that operation and put it everywhere. They'll put it in Germany, they'll put it everywhere. And I think that's what they want to get to. And that would be a significant breakthrough.
Would they end up building dry electrodes everywhere, or would they ship them from California from Texas to the other location?
I think they would want to do the whole operation.
Do operation.
Component, raw material in, product out.
Wow.
In each region that
Right.
they're selling cars.
Right.
Remember, when you're setting up supply chain, you really want to shrink that network latency, and you want to figure out how to keep all that mass, as close to your source of supply and your source of customer as possible.
Sure.
And when you're sending the stuff all over the world, it's really expensive.
But wouldn't do you think it's complex when you want to start cutting and pasting this facility over and over again? Do you think the dry cathode process is any more complex than the actual battery lines in terms of getting all that set up at once?
I think it is, but it's one of those things where once you have the breakthrough and you have the recipe, you can copy it, and it'll be a smaller operation than a conventional battery line when they get there. So, Tesla's always trying to make those leaps in manufacturing process time and, reducing that and simplification. So this would be the operation you'd want to cut and paste and put everywhere and scale up. But also the battery market, the landscape has changed. You can get, there's $40, $50 per kilowatt hour opportunities out there, and Tesla is going to be at the front of the line for all of those because they have a great reputation. They're not like Ford, they're not like GM, where they order a bunch of product, they sit on it, they push it back to you, and then it sits in their factory forever. It sits on their dealer lots forever, and then they don't ever reorder. Tesla has this constant, this is called the cash conversion cycle, this rapid consumption, rapid deployment, 2 weeks of inventory in the field, and they're ordering more product. So that Tesla's the one that everybody wants to do business with on the battery side. At the same time, they can drive themselves a pretty hard bargain just by the performance of their operation, their sales.
On that same subject, have you heard anything at all about the CATL used equipment in Reno in terms of that making any
I
progress?
just heard that they've acquired it and they're setting it up. I don't know if it's gonna be used for semi. I don't know if it's augmenting what's happening in Nevada for everything else. But yeah, they acquired it. They probably got it for hopefully pennies on the dollar.
Yeah, well, that'd be good. I'm pretty sure, just based on, I suppose you could pay a good dollar for it if it's just ready to go, because you would save so much money in terms of all the, figuring it out and making it work. But my guess would be that the reason they bought it was because it was offered to them at a good price. That's just a guess.
Yeah. Yeah.
All right. Well,
Yeah.
do you have anything else that you're passionate about today that we didn't cover today that you think is worthy of bringing up?
No, I think we're in an exciting period. I think we're ending the quarter. I think you're hearing less and less conversation about gross margins, although that drumbeat will probably start. But I think the robo-taxi event happening between product and delivery and between earnings, that's an interesting phenomena there. That may just completely change the earnings discussion based on how well that goes. Tesla's an engineering company. They're not a production, visual arts company. So, I mean, my hopes aren't through the moon in terms of 1010. I want to kind of just keep them in check. At the same time, Tesla has all this innovation kind of spooling up over the last several years. What they're doing with FSD, what they're doing with Dojo, what they're doing with humanoid robots, what they're doing with robotaxi. And at some point, there's going to be a high velocity of these things just coming to fruition and coming out. They're not all guaranteed. I think, this is the big argument I see a lot on X these days is how do you value Tesla? It's up at 100 times forward earnings. Well, guess what? It got to 255 times forward earnings in November of 21. And I
Right.
bet every tick above 50 times forward, between 50 to 250, there was some analysts out there saying it's too expensive,
Right.
it's too expensive, and it goes from 50 to 250. Was that a short-term bubble? Yeah, of course. But question is what are people's time horizon and what do they put a value on forward earnings? It's not necessarily everything that's in the Bloomberg terminal is how the world thinks. And that's how we got to 250 at one point in time. I'm not saying you make your decisions on that. I'm just saying that Tesla has become an increasingly difficult company for conventional valuation. It's only become more difficult. So you've really got to be into these details. You really have to understand how to value these details. And you have to have your own conviction, your own time horizon, try to do these things. That's why I don't like giving out generic advice to people on any of this, because it's really dependent on the person and what their goals are. But Tesla's become, to me, takeaway is very difficult to evaluate conventionally.
Yeah, well, obviously that a lot of that 100 times forward earnings is optionality on Optimus and all the rest at this point.
Correct.
And, I've been talking about 2026 now for about, I don't know how many months, 15 months or something. I've been talking about 2026 as being the year when it all comes together. And I still think that's when it all comes together. Well, we're getting to the point now where I'm not going to be the only person thinking that way. It's going to start to permeate a lot of other people's thinking. And we're getting close enough to 2026 to where the optionality is going to start getting more and more expensive.
And I hope the other thing, I think you nailed that. And the other thing is, it doesn't feel like anybody else is getting really close. When I say really close, it's like, are they building profitable hardware? What check? Yes or no? Do they have a great operating software, system in their vehicle that's ubiquitous, that works all over the world? Nobody has it, actually, freebies.
Yeah.
And then, do they have full self-driving? Where are they at? Where are they at on their cost structure? It's one thing to have it. It's another thing, is it scalable? Is it economical? And And then you have humanoids, and then you have them building these, this largest data center, not only in auto, but like in
Yeah.
in everything for AI. And who else has this? Who else is getting one of the things I always look at when I'm thinking about how to value things is like, where are they at? What is it worth? But also, are people getting closer? And they just going to get, is the competition coming, and are they going to get cloned? And by the time I think the competition is ready to build a 2020 Model Y where they can make $7,000 to $10,000 of profit per vehicle, Tesla will have unsupervised full self-driving and many other things happening in vehicles well below $30,000 out there. And I just think as these companies think that they're catching up, Tesla's doing these bigger leaps, into the next thing. That's kind of what I've been seeing. But there's inherent risk in everything. Tesla's going after the most audacious goals of any company I've ever seen.
Yeah, I must have asked you this question before. I know I've asked like everybody that I can think of this question, but you would be the most obvious one to ask since you have all this experience in factories. If there is an Optimus who has, this humanoid robot that has generalized capabilities, not maybe every single job in the factory or every single job, in non-factory situations, but has pretty good capabilities for either $50,000 period or $50,000 a year, something where its value is 200,000 and you're paying 50,000 a year as a factory worker. Do you believe that especially with all the rest of the robots that are coming out now and making it more noticeable, do you believe that the factories of the world, the ones that you've known and the ones that you've been involved in, would be champing at the bit to get these as fast as they could once they prove out? Would this be something that would be a dramatic, like people waiting in line like they were for Cybertruck?
Yeah, but it wouldn't be, these would be like, the NVIDIA GPU. There's nobody waiting in a physical line for NVIDIA GPUs, but these companies are, you heard that Larry Ellison, they're at dinner begging,
Right.
take our money. It'll be one of those things. But you got to get the robot working in a way where it can do many, many tasks very precisely at the right speed with the right yield. And the tolerances have to be good. Like there's not enough nuanced discussion here. I see some of these humanoid robots, I see some of these things that are walking around, somebody's showing it like sloppily, like cracking an egg and throwing it in a frying pan. You're going to need much greater accuracy to be in a manufacturing environment. Now, when you're building vehicles versus you're building consumer electronics, you're going to even need a greater level of precision when you're doing consumer electronics. But I do think Tesla is designing something that will get to that end point, and then they'll have the ability to build it. I'm not sure everyone else is designing something that's going to have the right level of accuracy to work in a factory environment. Remember, a lot of these bot companies don't have high volume manufacturing experience
Right.
in them.
Yeah, no, I think that's the more understandable side, that if Tesla gets it right, then they can make a lot of them, and the other guys probably can't make them as fast. Not that I care, because I don't think competition is going to be the issue. It's more for me, people are like, well, they'll probably only be able to make, a million in 2027 because the market won't be there. And I'm saying to myself, I've said this from the first time I ever saw one of the darn robots, that I had this little company with 100 employees and I would have bought 10 the way they were a year ago, because
it's going to start.
they would have been good enough for my company.
Yeah. The theory is it doesn't have to be good enough for every job in your company,
Right.
but my theory is it's going to start at the perimeters of the factory where you're doing final inspection, you're doing incoming, receiving, and you're doing outgoing.
Yeah.
And you're doing these larger tasks, you're moving boxes,
Right.
and you could be doing some very precise things in terms of incoming inspection and material management. And then as the accuracy improves, as the training time improves, then you can start moving it closer to inside of the core of the factory. And on that inbound, outbound side, there are millions of jobs for that. And think of every distribution center, think of any factory that's making any medium, large size product. They have to have incoming, they have to have outgoing. and there's a ton of jobs there.
Yeah. Yeah. All right. Well, with
All
that
right.
said, I'll let you go and I will continue on with what the bond market is doing now. That'll be pretty
Yeah.
interesting.
It's pretty
Thank you.
tricky today. Thanks, Randy. Have a good one.
Bye for now.
Bye. Bye.
All right, so let's take a look. We'll start with, of course, what happened today, which for some people might have been a little surprising. We did have the market ending up in the red as the day concluded. We had the Dow down 104 after having been up, I think, 350 or 400 points at some point along the day. We have the NASDAQ down 54 at the end of the day after having been up substantially. S&P down 16, also was up substantially. And then Tesla, which was up about 6 or so, ending up the day down 0.67. In percentage basis, that would be Dow down 25.25, NASDAQ down 0.31, S&P down 0.29, very close there, by the way. And Tesla also close, down 0.29. So that's pretty interesting. That never happens. And then we've got the Magnificent Seven, half in the green, half in the red. And Cathie Wood's same thing, very mixed today. Tesla in the after hours is up about $1 and change. All right, now here's the interesting one. Let's see what's happening with the bonds, because the bonds had popped up in the at the end of the day and are still continuing at this moment to pop up a little bit, a tiny bit. So we've got the 10-year back over 3.7 at 3.717, up 3 basis points in the pre-market after having gone up, I forget, another 3 or 4 during the day. So this is, a little profit taking on the news. Not shocking, not actually surprising. I think I predicted it. I would have been more likely to have predicted it if it had been a 25 basis points, then I would have definitely felt like we would have had a lot of selling on the news. This selling on the news is a tad surprising because the 50 basis points was not 100% certain by any stretch of the imagination. So you got the 2-year up about the same, up 2.6. So that's still staying in, the two of them coordinated. What you have that's happening very rapidly now is the 2-month is, of course, dropping. The yields are dropping on the 2-month fairly rapidly. You're now down to 4.8, which is only 110 basis points compared to the 140, 150 that it's been for quite a long time. So that's what I told you the other day. I told you it wasn't investment advice, but I did tell you that the 2-month would now start to come under pressure. Well, the opposite, right? The price of the 2-month will be going up as the yield drops. The 3-month also is dropping rapidly. It's down 0.6 of a basis point right now. All right, now let's go into the oils. They were dropping last time I checked, a little bit. So you've got oil, the Texas Intermediate almost back to 70 again at 70.25, down 0.66 in this pre-market situation. And you've got the $3 difference is back, $3.40, with Brent unchanged in the pre-market. Natural gas up, moving back up again. So it was down earlier. Now it's back up 0.57% at almost $2.30. You've got gold, which had crossed the 2,600 level, has fallen off quite a lot as the dollar would become stronger than the gold goes down, right? Is that how it works? Sometimes it's hard to remember all these relationships. But anyway, gold is at 2,582. You got silver still over 30 at $30.40. And that's down 0.94% though in the pre-market. Copper down similar 0.80 at 426. Then you've got the dollar up against the yen, 0.25, down against the euro, 0.04. So not a lot of motion in the dollar. I don't know. The headline is dollar drops as the Fed cuts rates. That's right. So the dollar is down. That should make the gold would be up. I'm so sorry I got that backward. So the dollar should be going down because now people can get a higher yield in other central banks compared to what they could against the dollar today. So the dollar would be coming down, but I don't see the dollar coming down a lot here. And gold, therefore, when the dollar comes down, then you can buy more gold So then people would pay more dollars for it. So that is not happening either way, quite frankly, at this point. We have got the Bitcoin up 1171, well above 60,000 again at 61,356. And the equities now, the Dow, so after being down at the all over the place today, a lot of volatility. You've got the Dow up 69 or 0.16, S&P up 1475 or 0.26, and the NASDAQ up the most, up 71.75 or 0.37. So some people think that the Dow will be back up again tomorrow. I mean, the equities will be back up again tomorrow. At some point, you would expect some leveling out to take place here. We know we can be pretty confident of what's going to happen over the next 6 months now with regard to interest rates. I think you're going to see that almost all of that 200 basis points, of which you've got 50 already, so another 150. I think you'll see almost that entire additional 150 by the middle of next year. So you can pretty well, it might be 1 month versus another month. Now, there's a lot of stuff that can happen, and you hear me on this channel, and sometimes you're probably like, Randy, yesterday you said this, and now you're saying, well, you know what? Things change. And one of the things that's changing is oil. And remember, oil is like the most critical commodity of all when it comes to everything, even to services. You know, almost every single service is somewhat connected to oil because people have to drive and people have to receive some of their materials by transportation and whatnot. So their heating, their air conditioning is being the cost of that is all being impacted. So even the services, every single thing in life is dependent upon those energy resources. And with those energy resources at very, very low levels right now, that does bode well for what I've been talking about for a year and a half, which is that inflation should be going down. In fact, we could be looking, as Cathie Wood says, we could be looking at deflation based on the fact that oil is so low and maybe going lower. All right, so earlier today, Scott Walter was on and he gave us his 10, and they were outstanding questions. If you didn't see that yet, you want to go take a look here. Now, remember, these are not just questions. I mean, these are questions that end up giving you some insight into what these individuals are thinking about Tesla, about the various products. So anyway, I'll put that card up right there. And then tomorrow, regular schedule, we should have Cern here tomorrow. And guess what? He'll have questions also. So this is kind of fun. I hope you're liking it. Put your questions down below in the comments. And then if you haven't liked it yet, hit the like. And obviously, it'd be lovely to have you part of the Patreon project, which if you looked in the description below, you can find the link. And it's easy and simple and fast. All right, that's all I got for you. It's been great talking to you.